Well, hello, folks. I'm Elliot Little, and this is your daily TA wrap. We take a look at these markets, and we do it from a NeoTA classical perspective. Each time asking ourselves what happened today, and what does it tell us about the coming days. I do this show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time and archived on YouTube. You can get me there, LA Little. Just type it in. You can subscribe to it, pick up the shows on your iPod, your iPad, your anything I guess, and any of your mobile devices, Android and so forth. As far as the market and what happened today, well, another day of up. We've kind of gotten used to that. Not quite as much, but almost 0.5%, 0.42, 0.44, 0.41, and the S&P's 0.48. S&P's clipped the 2,000 mark. That was kind of the highlight today. Wasn't able to hold it at the close, 1997, almost 1998, but did get over it. Elsewhere, gold week again, silver week again, oil week again. So commodities still taking it on the chin. The dollar still strong, still barreling higher. That dollar's been in this trend for quite a ways and quite a while. And then, matter of fact, that dollar is starting to make a pretty good dent on the euro. And that, in fact, helped juice, along with Draghi's comments that dropped the euro again, helped juice the European market some, as they have sold off rather vociferously. So up day, does that mean we're going higher? Well, I don't know if we can jump to that conclusion. Let's pop over, take a look at these charts and see what we think. Starting with the S&P. Okay, the S&P has been and continues to be on this unsustainable ascent in terms of the angle of the incline. That thing is not going to keep going, folks. But right now, no volume. I think today was probably almost the lightest day of the year, if not the lightest in terms of volume. Does trade higher, fails on the 2,000 mark, but I don't know that I can count that as a failure. That's just a round number. But certainly there were some sellers at that round number. But given the push, given the way this is set up, given the fact that it retested and now has regenerated higher off the Friday retest, there's nothing here to tell us this thing's going to fail. So I can't see it on the S&P chart. S&P simply says, hey, we can still go higher. If we take a look at the Dow, though, the Dow actually pops up, tests that swing point high, which was also the second of 2 breakdown bars. So in other words, we had a breakdown bar here, we had a breakdown bar here. That actually ended up being a swing point high. Test into that today, gets over the top, closes back underneath it, has less volume. That's a test failure at the highs. We'll see if that causes it to pull back. Should. We'll see if it matters. So far, it hasn't anything mattered. But, as you slowly get higher and higher, and as slowly you accumulate more and more negative signs, eventually they're going to take hold, and I suspect that's what we're going to see pretty soon. NASDAQ trades sideways 3 bars, does some underovers, does some 2-bar reversals. All they did was go sideways, couldn't pull back, pushes up again today. Leaves kind of an ugly doji up there at the highs, though. That's not the kind of candle you want to see at the highs. That, to me, actually looks like it's going to pull back, but it could certainly test higher again tomorrow before it does it. NDX looks almost identical. Another ugly candle at the top. The ascent bar, the angle of ascent here is rather ridiculous, but continuing. It has leveled out a little bit, so not quite as bad as it was, but again, another ugly candle bar at the top. If we pop over to the Russell pops up. Remember now, the Russell was testing that high, tried to test it last, I think that was Tuesday, fails to get over it, right? Pulls back, test into these highs, reverses, and sets up nested ABCD structures. It has one from here back down and up, and that got within a buck today of finishing it off. So almost a finish on that first one. The second one, of course, from the same area back down, and that one pretends up to about 1183. So you had 1171.51 on today's. You got as high as 1170.69. So within a buck. Now that can test up there tomorrow and get it, but you get a doji after a break. So it is going to be a trend transition to sideways here as you're going into the next high, which actually would transition it to bullish. Top of that's 1169.55. You close at 65.22. This, another doji, looks to me like this one also is going to try to pull back, and we may not get the finish on the second of the two. So if we go back, review here, Dow reversal signal. S&Ps can go higher. All it did was get up to 2,000 and reverse. NASDAQ, NDX, both ugly dojis, and this one also has a doji. Dojis can be reversals. Of course, they've got to print lower the next bar, and they're not reversal signals until they do. So you got three neutrals, a negative, and a positive. Just like we've had before, mixed signals. Now, let's walk over to the world markets. And in the world markets, let's start with Europe, because Europe actually has some interesting signals. The first is in the CACs. So the CACs, they dissolved their government. I guess the market liked that. You get up to 43.42.11. That breakdown bar is 43.37.74. So you get up over it, close over it, right? And that was also a break of this retest regen bar, which had a slightly lower high, I believe. Let me make certain of that. 43.35. So 43.35, 43.37, you close over on both. So that has failed to retest and regen. Now I like to give it one more bar and see if it immediately comes back. You know, because sometimes you'll slightly get over and come right back down. You got no volume going into it, which is another reason to do it, compared to this bar and even compared to the low. So I would wait tomorrow and see if it actually can trade up and close above it. If it does, back into a range trade, right? If it doesn't, regenerate lower potentially. So jury's still out here. It is at a critical point. There is no more room to the upside, so to speak. That's the CACs. If we look over at the DAX, now the FTSE was closed today, so nothing happening there. If we look over at the DAX pushes up, trying to get to the breakdown bar. So it got over the key resistance zone, which was right here, just as the CACs got over its today. This is all in the back of the Draghi speech on Friday when the European markets were closed. They gapped up and kept running all day, closed at the highs. Tomorrow, this one's going to try to get up in here. So what I'm going to be curious to see is, does this one make it up here and is able to stay up tonight? And does that allow the CACs to stay higher and break that retest regen lower, the bearish one? If so, then the European markets have actually changed for the better. To me, that's the bigger test tonight, not so much what our markets do tomorrow. So that's the European markets. Let's pop over now. If we look over at the Hong Kong and the China HCAP shares, here's the Hong Kong, gets over the high, test failure at the highs. Nikkei, test failure, 2-bar reversal one more time, and the H shares goes into, now this one is actually the only one that's positive, goes into the bottom of the big top bar. You know, so the high volume top, you're into the bar. If it can stay up into that bar, China can actually climb back up and test this little zone right up here, which would be the ultimate test for it. But that so far is a positive because you held into that bar. So you're into this big bar. So China, just like we're talking about with the CACs, You'll want to see it extend one more bar, which would get you up to the top. So that's the look at the overseas markets. If I look at, and there's a couple highlights here outside of those main ones. Brazil powers higher. The Taiwanese market actually finishes off an ABCD structure and does a doji, which again can be a reversal. And then with the dollar crushing all currencies, most of these markets are trying to move higher because they're so cheap now. So we've got the all ordinaries up there pressing the high still. We've got the Brazilian market pressing and breaking out. We've got the Toronto exchange we just looked at. So world markets loving a strong dollar. Sectors, if we look at the sectors, and I'm not going to go through all of these, but if we look at the sectors, there you have pretty much, and I'll just highlight a couple, you have pretty much all of the 2-bar reversals, right, getting bars back up but struggling. And in particular, if I look at the XLK, another one of those bad dojis at the high, and that actually ends up being another 2-bar reversal. So I think technology is going to struggle come tomorrow. The SOX itself was weak, also reversed today. So sector-wise, most of them fairly neutral, a couple of them bullish, like XLF. Well, we talked about it on the show last night, that it probably is going to extend, and it did. But elsewhere, looks like they're going to try to come in some. Finally, switching over to the auxiliary markets. Gold, silver, commodities, as we saw to start with, all struggling here. Let me get up these charts. So a quick look here, you can see the FXE just crushed again off the Draghi, and that is what was powering their European markets. If we pop over, look at silver and gold. Silver down here, just, you know, death by 1,000 cuts kind of a move. Gold, 3 bars now after the gap down under that big bar. Gold has to turn it around pretty soon, because gold is starting to come after these lows on the weekly, and you really, if you're bullish, you don't want to see it break that, because if it does, it's coming all the way to the bottom again. Copper still pushing higher, one of the few commodities that is. And then the bonds just keep pressing higher. Going to go back from test to top again. Don't look like they have the volume this time, but does look like it's going to test again. And folks, this market has been one of the most bullish markets. Over and over again, we've seen ABCD structures complete, continue, complete, right, over and over. And we've got another one right now that's in place trying to break higher. So, and this was true on the weekly as well prior, and as you see it on the weekly, this is still trying to finish off a large ABCD structure to the top side. That move still in place here and still going, so it still has farther to go to finish it off. So bonds in general continue to look bullish. I don't see anything bearish about them. Okay, so wrap. What do we got here for the wrap? Well, looks to me like, you know, there's no strong signal saying a pullback, but there's enough evidence to me to suggest we're going to trade sideways to lower tomorrow. That'd be my bias going into tomorrow. Okay, so we got some questions. As you know, you can text me 303-912-9110. I'll pick up your text there. You could also email me. I can pick them up at support@tatoday.com, and would be happy to entertain your questions. Of course, you can type them in. If you have a login on Livestream, you can easily get one. Just pop over to Livestream and create one if you want to talk to me live through the chat window. So Dan says, hi LA, can you take a look at UNG for a trade? I'm looking at the 717 bar for a trade north. The trade is to the top of the bar, and also your thoughts on UNL and UNG. So let's pop over and look at UNG first. Now the difference between UNG, UNL has to do with the way the ETFs are structured. UNG is pretty much front month of the futures, whereas UNL is over multiple months, about 6 months. So we got some volume today. All right, let's see here. So the question is the 717 bar. No, that big volume bar. Yeah, and that looks like a reasonable place to try to get to. So let's see if it makes sense to get there. Well, Dan, it does. It actually looks like it's going to try to. You got this high volume bar, top 2167. You close over today 2172. So that does look like it's trying to make a run. The only issue is a lot of times the issue in this particular trade, and that is you know, where do you put your stops? Because if you break this down into kind of like two ranges, right? You kind of got two ranges here, and you just peeked into the top of this one. So if you can pick it up tomorrow right here, where's your stop? Well, your stop almost has to be down here somewhere. I mean, I guess you could trade it up underneath here. That might not be a bad spot, but you know, a little higher probability of failing. And if you're shooting for here, right, you can see if you're doing this one, it doesn't make sense. If you're doing this one, it's about a 1-to-1. So unfortunately, I don't see the trade. Just, you know, I think it's going to go there. I just don't see a lot of good reward to risk on it. I'm coming back over to look at the weekly, and your resistance here is 2250 as well, which is basically that top. So yeah, I think the most you can expect is there, and it's going to be hard to get that trade on now. So the real trade probably was the strength here, then the pullback, right, and test of this low, these two bars. That would have been the place to probably put the trade on. Now it's a little late, I think. Let's look at the UNL and see if it looks any different. And I'm guessing it's about the same. And yeah, the UNL is actually almost there. So I don't see the trade there either. So unfortunately, I think it's just a little late to put the trade on from a reward to risk perspective. Next one is from RFMCF. ETW. I calculate an ABCD. So okay, let me throw this guy in right quick, and let's see if we can see what you got here. So ETW is a ETF, I'm assuming, and it doesn't ring a bell, so I'll have to pop it up to see what it is. Oh no, Eaton Vance. Okay, this one actually, I believe, was a signal in the trading signals, if I remember right, or at least I remember looking at it. I don't know if we ended up saying it was or not. Okay, so the question here is, I calculate an ABCD starting at the 8-6 bar, which is going to be this low, and continuing up. So let's just draw it in here. So I'll draw it in, and then I'll see if my numbers look the same as yours. And it looks like it goes to here, back down, and back up again. So that would be the ABCD I'd draw. It goes to 1330. And is that 1330? Let me see if we got them the same. So that's 1226. This top was 1273. So what is that? 47 points up on top of that low. So mine's a little different than yours. And probably you took yours to this high, 1283. And the reason I do this, and I've explained this before, but let me just explain it again. I always try to be more conservative than optimistic. So if I'm looking at this ABCD, I want to see the first place that I get a high, then a lower high, and a lower low. If I get that, that to me is the B point here, and then the C point is wherever this one ends, which happened to end on that bar. That gives me a more conservative measure than, you know, taking this thing all the way up, right, to here and using this bar, right, and then taking this one, right. That's a very different measure. And so yeah, this one's going to be more conservative. It's not going to go as high, but I think that's a better way to view these things, and that's one of the alterations I've made to the ABCD structures compared to most folks. Most folks would count that high. So that's the first thing. So how likely is to get through resistance 1290? Okay, so calculating the way I calculated, I forgot the number now. It was 47, I think, onto this, right? So it gets you up to it gets you to 1303. 1303 is just over these highs and right at that one. So 1299. So I would think that you're probably not going to break these two highs. And that conservative measure gets you right to them. So maybe you get over them and fall back underneath them and finish off the ABCD structure. Now you do have three swing point highs located congruently here. And then you've got this high. I guess it wasn't 1, 2, 3, 4, 5, 6. I'm not sure why that one doesn't print as a high. Oh, because you got another one right after it. So that, well, that's interesting. So that was a high and a low, it looks like. And I don't think my charts know how to deal with that. Interesting. So I have to make a note to myself and go look at that. So anyway, three swing point highs at the top. I don't think it's going to get over it. And I think with the more conservative measure, you're going to get to the top and you're going to fail up here somewhere at these highs, somewhere here. As a matter of fact, this is going to reprint tonight. You're probably going to see resistance zones up in this area, and I suspect that's what's going to stop it. Okay, let me look at the weekly. Yeah, and you got the breakdown bar there too, 1291. So yeah, I do think it's going to get stuck right up there. Okay. All right, so that's it for the questions for now. If you got one, send it to me. I'll take a look at it. Let me take a second to talk about something I did today, or I covered today, and just to show you, you know, markets rotate. They're always rotating. They don't stand still. You know, they go from one thing to the other, just like we were talking about earlier, where we had the look at the European markets trying to, you know, change. I just want to pop up a few things here. Some of these retailers, you know, now this is a specialty retailer, but this one's coming back up. But if we kind of go through some of these and look at them, you're going to see a lot of these retailers having been extremely bearish for quite a while. That was one of them. Here's this is actually this is a REIT. It's a retail REIT. I'm looking through somewhere, and here's another specialty retailer. Also has been bearish, Medifast. And I'm glancing through the post-earnings trades, and I'm just glancing at these, because I did a show this morning on some of these. Here's another one. This is a Staples. This one also is bearish. So these are all the bearish ones that are showing up. Another specialty retailer, Toomey Holdings. Excuse me, that's a bullish one. And that one you can see a nice bullish form. This actually has held up really well all the way through. But some of these are just starting to turn, and the ones I'm thinking of are like TJ Maxx and some of these others. So let me pull some of these up. Here's TJ Maxx. Nice big spike up on earnings, right? And now it's leveling out. Another one was Ross Stores I saw this morning. That one also did the same sort of thing, right? Spiked up, gaps up. It's finished off an ABCD structure. It's not like you want to buy these right now, but if you look over on their weeklies, they have a long way to go to get back to the top. And so a very bearish kind of scenario was taking place, and now they're starting to turn. They're starting to head back up. And those stocks, if you look at them on the cube, you can see that it's just turned bullish. It's sideways here, and if you click on the, and actually let me bring up the other one so I can click on it. So I'm going to click here, get this cube up so I can actually click the MTTFs. Or at least I thought I could. Maybe I can't. I guess I have to do it from the other one. I'm going to enable that so you can do it from here. But if you were able to click on that, you'd see that this one is fairly extended already. it's only got maybe another 2 or 3 bars and it's going to change. And if I go back on the weekly and look at it, well, here it is right here. It's about to change. You went over that one and you got another one right above it. You get over that, you're going to transition out of sideways into long, right, into bullish. And at the same time, you're going to be able to see that this one's just changed, that one's just changed. Yeah, way extended long term, but hey, when you change here, you can go again. And that's what a lot of these are starting to do, and that's the sort of rotation that takes place in the market. And if you can pick up on it before it really gets going, like these are fairly fresh, you can get into those and actually still make some money. So if this were to pull back, you know, the top here was, actually it broke over this one, not that one. So it broke over this high. A pull back to 71 or even into this would make sense. I doubt it's going to get that deep. Maybe the bottom of this, 72.17. That would be a good place to look at this. That's the bottom of this big bar, bottom of this big bar. So you can see how that support zone as it shows up here is going to be pretty strong, probably right in there. So as this pulls back into this area, it probably is going to be a buy, and you're going to be able to put stops, you know, at a fairly high level. You don't have to put them way down here, and that gives you a pretty good opportunity to go for the highs, and you can get reward to risk that makes a lot of sense, and into a sector that the money now is rotating back into. You want the wind at your back. So as long as the market stays bullish and you've got a turn in a sector, it's a nice sector to start looking at, and that is just an example of the rotation that goes on. Okay, let's see here if I got any questions before I call it a night. And no text messages. No, no, and no. So it looks like I'm done for the night. Hey, folks, Sunday night, no show. I'm going to be out of town. I'm taking a long weekend. Labor Day is Monday. No show on Monday as well. We'll be back in business on Tuesday next week. And, you know, so just a heads up. Those will be posted, of course. But just a heads up that I'll be taking a long weekend and getting a little rest, maybe some relaxation for a run at the stretch, right? Get going again after that. Thanks for joining me. Take care. Have a good one. Good night, folks.